and welcome to this month's blog called Cash Flow Forecasting for GP Practices. We're going to have a look at how to produce a simple cash flow forecast using an Excel spreadsheet. We only need to have a basic knowledge of Excel to do today's session, but if you have a more advanced Excel skill, then you can develop this model to integrate with budgets and profit forecast models and export transactions from your accounting software. The key is to just get started with something that's easy to use and develop it over time. There are forecasting modules within your software packages such as Xero, but by using Excel, we think this is going to enable you to manage your cash flows more closely and identify any issues such as missing claims much more quickly. So let's get started. So you can see on the screen here, we've got a basic Excel spreadsheet. I've set some headers up there already to get us going. So months along the top, and we're going to start by just copying out the headings from our GMS statement. This is where the majority of our work comes from. So we're just going to type in the headings for the type of income that we receive. And I'm just writing these in here now. And this is the income that we might see for reimbursements. We also then have some PCN participation. I'm just going to put some reimbursements for, say, CQC and our enhanced services. We also, from our GMS statement, will have some expenses that are deducted from the income. So we're going to put those in there as well. And additional benefits, employers, LMC levies. So this will give us our net GMS inflow. And I've set these formula up just simply here to take the income less the expenditure. We've also got some overheads. So let's think about the main overheads we're going to have for the practice. So some practice expenses, maybe some premises expenses. Again, you can lump these together or you can put them in more detail line by line if you wish. Some admin expenses, salaries, maybe some locum costs, payments made out for PAYE and NHS pension. And then we may have some other cash outflows such as partner drawings, most certainly. Maybe you have mortgages or loan repayments, and maybe you have plans to purchase some equipment or make some property enhancements. So these are just a few examples, but you can go into as much detail as you wish here. But bear in mind, this is just to help us get an indication of cash flow and to highlight or spot any significant differences. In my example, I've set here the brought forward. So I'm going to say here that I'm brought forward bank balance per the bank statement at the 1st of April is 500,000. Now we need to start populating this with some numbers. Again, from the cash flow forecasting point of view, these do not need to be exact numbers, but just an indication of what you're expecting. And again, this is helpful to look at your GMS statements, and this will help to identify sort of values that you're expecting for these sort of income and expenditures. Rates, we normally get that reimbursed in the first month of the financial year. Maybe CQC a bit later. I think there's some estimates here, as you can see. Our employee superann. These are costs. Make life easy for yourself and avoid having to put minus signs in. So set up the formula so that you can total up expenses, total up income, and then set the formula to do the net of the two, so one minus the other, so you don't have to keep inputting negative figures. Obviously, if any of these expenses or normal deductions here are reimbursements, then you need to put a negative figure in, but most of the time there will be expenses. Put some figures in here for practice expenses. And again, the best way to do this is to look at previous year's accounts, divide it by 12, and then start by populating the spreadsheet. And if you know of anything that's going to change, and we'll look at that in a moment, then amend that as you go. Just put some figures in like that. So we've got to putting in our expenses and our income, and then we want to create a formula. We're going to add our income, our net cash inflow from GMS statement minus our overhead expenses. Just going to put in here as well something I've forgotten, some PPA claims, because that comes from a separate place and certainly important to be putting in. So we've got here our brought forward cash balance, our net cash inflow or outflow in this case, and that gives us a new balance for the end of April. In May, that balance needs to be the same as the brought forward, so we put in a plus sign, highlight that cell, and that will automatically populate for us. So what we need to do then is say, well, that's for April. We need to do that for every month going forward. So we can look at April, May, June. You can get your little cursor to be that cross at the bottom there, and you can drag it across, and you can then put it through to all the way to the end of March if you want to. We're going to highlight all of those areas of income because most of those are recurring, and again, just drag it across. Then thinking about, well, what else is different? So we do need to think about things like achievement, which is normally received in June. Put that in there. We're going to assume that most of these are going to stay the same as well for the next 3 months. We're going to claim our CQC. We're expecting that to happen in May. Rates, obviously that's a one-off. We're only going to receive that in April. So we're working our way through here and our PPA claims as well. And then looking at overheads. Again, highlight them all, get that little cursor at the bottom there and drag it across. And then just check it all makes sense. That formula we've set up in that cell there to calculate the net cash flow, drag and drop it across as well. So we're starting very quickly. And as you can see, we could drag this across all the way through to March and very quickly populate a very basic cash flow. This is one I prepared earlier. Again, looking at all the cash inflows and outflows for each month. So it gives us an idea of the bank balance that we're expecting for the end of each month. And this is just purely by reviewing what happened in the previous year. Stage 2. So what do I know or what do I anticipate today that might change? Well, let's say today we think our global sum is going to increase by a percentage. So I've used a formula there, but again, you can just hard type in the figures there if you want to. Aspirations, so for the recent year, that has increased from 70% to now 80%. So again, I've put it in as a formula. You don't need to do that. You can just hard type in the correct figures or what you feel the figures should be. I'm working through each line on your spreadsheet to make sure that it's in line with what you expect. When you get to the overheads, again, you've taken salaries perhaps from previous year. And again, I've put in a percentage here and formulated that. So basically I'm saying our original costs were 55,000. I'm going to increase them by 2%. This allows you then, if that salary increase changes to say 1%, you can easily change that percentage there without having to retype in the whole lot for each month. So again, that's a little bit more of an advanced skill, but again, something worth thinking about doing because it makes life a little easier. Obviously, with increase in PAYE, we've estimated a 3% increase here. Again, it's probably best to actually calculate what you think that's going to be, and 2% for pension. Again, I've set those up with little formulas, you can see here, to take what was the previous year and then increase it by the percentages here. Again, you don't need to do that. You can again hard type in the figures that you're expecting. So that gives us then a new forecast for each month. So then once we've set our cash flow forecast together, we then need to compare it with what actually happens. So what I've done here is inserted a column. And if you right click at the top of a column, you can insert a column quite easily like that. So I've inserted a column for April and titled this Actuals. I've then been through my GMS statement and put in the actual figures that are appearing for income. And then looking at my expenditure, probably by looking at the trial balance or an export from your software. Again, it doesn't need to be actually, pinpoint correct. It can be approximate. It doesn't need to be to the penny, but you do need to make sure that you can reconcile it so you can see what your balance brought forward was, your approximate cash flow inflow or outflow, and the balance at the end of the month. So that balance at the end of the month is quite critical because that's the one you need to use going forward. What we need to do then is compare what we originally forecast with what actually happened. So you need to know about any pension balances that may be coming. So again, you can modify your forecasts. We can see here on this that the PPA claim for April didn't come in. So that would be something to investigate. We're also having a look here when we're looking at locum costs. So we originally forecast 20,000 a month, but actually we only paid out 10. So then we need to think about, does that mean we're going to have 10 for every month going forward, or have we just not paid an invoice, for example? So this is where you start to sort of look at the differences between your forecast and your actual to make sure that your forecasting going forward is accurate. So this stage here is to modify any areas that you know need changing. So we put our actuals in for April. When we looked at our PPA, we realised that we hadn't claimed for April, or maybe it was late. So therefore, we need to modify our forecast for May. So, well, actually, that's going to come in May. So we've updated that from 3,500 to 7,000. We're looking at our locum costs, and actually we realised that 20,000 was too much for our forecast, and we're actually only spending 10. So again, I've modified here my forecast going forward for May and June. So my actual bank balance that I've reconciled in my accounting software for the end of April was 495,473. That has to be the actual brought forward figure in my forecast going forward. Otherwise, we're not going to be looking at the correct figure for our cash flow. So again, we do the same thing for May. We insert a column, we put in our figures for May taken from our GMS statement. And then we start to look at the differences between what we forecast. So here we forecast that our CQC reimbursement would come in May. It didn't come in, so we can chase it and find out what happened. Did we get the paperwork in, etc. And it turns out we didn't get the paperwork in on time, and actually we're going to receive it in June. So we've put in there our CQC reimbursement now expected in June. We get to our May PPA claims, and as predicted, yes, we didn't get it in April. It did come through in May, and therefore that is in line with what we expected. But hopefully going forward, we'll do our claims on time, and it will be 3,500 a month. Looking at our costs. So in admin costs, and again, you can collate these figures again. You don't have to have a separate line for every single cost, but in this case, we can see here, we're forecasting 6,000 a month. The last 2 months have been 8. So you need to consider, why is that the case? Is it because we underestimated our cash flow, or is it because there's something just going on in April and May that's unique to April and May? Our locum costs, again, we've amended our forecast going forward because locum costs are panning out to be about 10,000 a month. And I've put here a potential reason here is that partners are deciding to do more sessions. So that's our outgoings. Again, actual figure here brought forward was 495,000. Our outflows for the month was 27,000. So our closing balance that reconciles to our accounting software is 467,946. So this is the figure, this forecast figure, and which will end up being in March. That's what we need to be keeping an eye on to make sure that we've always got enough cash, and we need to be at least looking for the whole year. So these are the sort of things that we've updated for. Just looking down to the bottom here. So this is our cash balance at the end of June. Now that looks very healthy, and it's often the partners will look at that bank balance and think, oh yes, we can take a nice chunk of extra drawings, thank you very much. But what you need to think about is the other things, and what we call the biggies, the things that you need to be aware of that could go out but haven't gone out yet, but you don't really know when they might go. So things to be aware of. So end of year adjustments for pension. So you've got here, we've got some old pension adjustments that haven't happened. Again, here 15 and 20,000, so not insubstantial amounts. We've also got here a salaried GP pension creditor of £60,000, which isn't unusual. A lot of practices do have a lot of pension arrears. Here we've got a seniority clawback. Again, there may be something on your balance sheet that you need to be aware of that could go out at any time. And also, as many practices with property issues there's some service charges here. So a creditor here of 150,000. So these are the sort of things that you need to speak to your accountant about to make sure that you're aware of them so that they don't become a surprise. And these are the sort of things, if possible, you need to be keeping a sort of a slush fund for. So although that's our forecast cash flow in our bank account, we are also aware that there's potentially £255,000 worth of expenses that may go out at some point, but we just don't know when. So actually your available cash flow is significantly less, and that's the figure that you need to be thinking about. I hope that's given you some insight into how to start a cash flow forecast. I hope you found that helpful. This is a very quick overview. If you want to have more information or you want some help with this, it's certainly something that Rowley's team can help you with. And at least we can set you up if you want us to, and show you and train you how to do this for yourselves. Hope you found that useful. Thank you.